Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets. These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global primary aluminium output fell to 5.274 million tons in June from 5.448 million tons in May, data from the International Aluminium Institute showed on Monday. Estimated Chinese production fell to 3.005 million tons in June from 3.105 million tons in May, it added.
Moving on to the top news in the energy sector.
U.S. refineries have sustained fewer mechanical outages as production has fallen because of the coronavirus pandemic in 2020, according to data from Energy Intelligence Service Industrial Info Resources. Average unplanned mechanical maintenance for crude units resulted in 95,000 barrels of capacity offline in April, May and June, compared with 254,000 barrels offline on average in the prior year period. Because of reduced travel caused by the COVID-19 pandemic, U.S. refinery utilization fell from record highs to 68% of 19 million barrels per day in April. Utilization rose to 78.1% by the first week of July.
We will now look at the top news in the agricultural sector.
Malaysia is losing up to 25% of its potential palm oil yield due to a labor shortage that is expected to worsen in the coming months, the Malaysian Palm Oil Association said on Monday. The group, which represents plantation firms, said the government's decision to freeze the recruitment of new foreign workers until December could lead to the demise of the industry. Pre-COVID, we were already short of 36,000 workers. This shortage has already resulted in us not realizing our potential production by 10% to 25%, MPOA Chief Executive Officer Naguib Wahab said in a conference.
Next we have agricultural price moves.
Chicago soybean futures rose for a fifth consecutive session on Monday to their highest since July 10 on strong demand, although expectations of crop-friendly weather and ample world supplies capped gains. Corn lost ground as weakness in oil prices raised demand concerns for the grain-based fuel ethanol. The most active soybean contract on the Chicago Board of Trade was up 0.5% at $8.99, 1/2 a bushel by 11:15 GMT, after climbing to its highest since July 10 to $8.99 a bushel earlier in the session. Corn fell 1% to $3.35 minus 1/2 a bushel, and wheat slipped 0.6% to $5.31 minus 1/2 a bushel.
We will now take a look at energy price moves.
Oil prices fell on Monday as coronavirus cases increased in many countries across the globe, but investors remained cautiously optimistic about ongoing talks over a European Union Recovery Fund to revive economies affected by the pandemic. Brent crude was down 35 cents, or 0.8%, at $42.79 per barrel by 11:21 GMT, while U.S. West Texas Intermediate slipped 36 cents, or 0.9%, to $40.23.
Moving on to metal price moves.
Copper eased on Monday, retreating from a two-year high, as new cases of the novel coronavirus threatened to stall any revival in the global economy and in metals demand. 3-month copper on the London Metal Exchange was down 0.6% to $6,410.50 in official trading. A week ago the metal touched a peak of $6,633 a ton, the highest since 2018, up from a low of $4,371 in March. A rebound in the economy of top metals consumer China and supply disruptions, mainly in the world's main producing region South America, has boosted prices. But a surge in cases of the coronavirus has thrown into doubt any quick rebound in the global economy, hitting copper, which is also used as a bellwether for economic health. LME aluminium fell 0.2% to $1,658 a ton. Zinc was steady at $2,183, lead rose 0.7% to $1,828.
Finally we have the most recent news on the financial market.
The euro retreated after hitting a 19-week high of $1.1467 on Monday after EU Summit Chairman Charles Michel said a recovery fund to revive economies hit by the COVID-19 pandemic could contain €390 billion in grants. EU leaders have made progress in Brussels after 3 days of talks, but they remain at odds over how to carve up the proposed €750 billion or $859 billion recovery fund designed to help Europe cope with its deepest recession since World War II. The next level to watch for the euro would be $1.1495, which would take the currency to a 1-1/2-year high. Elsewhere, the US dollar index was flat at 95.95. With its advance kept in check by investors' strong risk appetite on the back of expectations of more stimulus from Europe and also the United States.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.